Good morning, and welcome to day 2 of Innotribe. We have some amazing sessions for you today. We're going to be talking about synthetic minds. We're going to be decoding the economics of a virtual life, and we're going to be doing a deep dive into the potential possibilities behind tokenization. But first, we have what is our flagship session, the future of value. Previously called the future of money, we launched it 10, 11 years ago, and we've been talking about every single aspect of money that you can think of, from the history to the future, to hyper-personalization, digital currencies, tokenization. But we felt that the conversation has gone beyond money. We felt that money was too restrictive, and we wanted to open our wings. And that's why last year we sunset the future of value, future of money, and we came up with this new concept, which is the future of value, which allows us to have that expanded conversation. Because value today and tomorrow is so much more than just money and currencies. So I would like you to give a very warm welcome to our panel today. We have our moderator, James Lloyd. We have SK from Wise, and we have Alvin. Please welcome them to the stage.
Okay, thank you very much. Thank you, Ennis. And thank you, everyone, for being here. Tuesday morning session, flagship, as mentioned, always a bit of pressure, so please bear that in mind. I'll do a brief introduction. I'll ask our guests to introduce themselves, and then maybe I'll give a little bit of a structure for the audience, if that helps. So, James Lloyd, as mentioned, I'm the head of international for JustPay. We're a payments infrastructure firm working with large merchants, large banks, etc. I'm not going to do a sales pitch on that. SK, and you're permitted a sales pitch as part of your introduction.
Thank you for that. So I'm SK. I lead Wise's expansion in APAC. That includes entering new markets, applying for licenses, our relationships with the regulators, governments, payment systems, banking partners, and just generally ensuring we continue to grow and scale across APAC markets.
Excellent. Alvin.
Well, I'm Alvin. I am a VC, and what I do is that I invest in Web3 companies, and that entails anything decentralization, payment, crypto, the whole nine yards in fintech. And obviously, we're not touching that part of the business, but certainly we do explore, what future of value, future of money is, because that's where we are trying to track our investment.
Awesome.
Right.
So already I think you'll find we've got a great mix in terms of perhaps a little bit more traditional in terms of finance, albeit well, maybe actually that's incorrect. Maybe you're improving upon the traditional, and then maybe there's even a future improvement upon that. But let me set the scene a little bit. Innes mentioned we've been doing this session. I myself have been involved with the Innotribe team for actually about 10 years. I think Boston in 2014. I had a startup that I ran through the Innotribe challenge. I've been back in various capacities during that time. And as mentioned, it's been pretty interesting to see the evolution of, okay, future of money. Let's talk a little bit about payments, finance, what's happening today, 10, 20 years, etc. hence. Today is going to be a little bit different. We're going to talk about the future of value. So I wanted to set the scene a little bit about what that means. And I think for our conversation today, what I'd love to get to is, we'll start with a little bit on the payments piece, the finance piece, like where's that going? Let's get some kind of contrarian views if possible. But then begin to incorporate a little bit more on the cultural, environmental, social aspect. Like what is value? And I want to set the scene a little bit with an example which just occurred to me about an hour ago as we were getting the bus here from the hotel. Well, actually, let me ask the floor. Does anybody know what a green registration signifies in China? Has anyone noticed? Okay. Well, Tony, that's because I was talking to you about it this morning. Has anybody noticed the different color registrations on the roads?
The registration plate on the car.
Exactly. Registration plate on the car. So I've got one hand at the back. Wow. Okay. So now this is confirmation bias. After I've told you this, you will be noticing them everywhere, because the green registration on the cars in China means that it's an EV. It's an electric vehicle. Now, what I found
interestingly, India has the same thing. So if it's an EV, it'll have a green license plate. And I was there just recently, and I was noticing that everywhere.
Wow, okay. So now this kind of comes to my point. in China at least, and I was learning this in the last, as I say, 90 minutes, because I want to talk a little bit about finance and value in this. The EV, and Alvin was telling me, that registration plate is free, right? I mean, there's no payment associated with that because it's an EV, whereas with a normal registration plate in China, you need to pay X amount, 100,000 yuan, whatever it might be. So there's a value ascribed to that, both financially, but also in terms of incentives, government, environmental, and so on. And that's the kind of, like, that's an issue today, that's an item today, but they're the kind of examples that I thought we might try and touch on over the coming conversation about value is more than just the monetary, value ascribed to it. Increasingly, as we think about the environment, the environmental situation we find ourselves, if we think about the cultural and social nuance of these different markets, first time Sibos is in China, I want to talk a little bit more on that value side. But anyway, just to set the scene, let's start with the future of finance, or the future of money, as it were. SK, in your position, both in terms of Wise, in terms of what you're doing today, but then also maybe more broadly, what are the kind of couple of topics, trends that you guys are excited about as an organization, or you personally, when we think about, I mean, I've been walking the floor for the past day or two. I mean, you've got a lot on tokenization, you've got CBDCs, you've got cross-border interoperability, instant payments. What's interesting? What's exciting?
So you're going to see, because of the worlds that we come in, we're going to have very different perspectives.
Good. That's
I'm
what we want.
going to be as transparent and share exactly where we are and what I'm thinking, and at least my perspective of maybe the next 20 years. So today, from Wise's perspective, and at least my vantage point there, we still think there's a lot to be done with respect to fiat currency and how it moves around the world. What has happened in the last few years is domestically, in a lot of markets globally, we've seen payments really seeing a transformation. It happens instantly. And I know today we're quite used to it, but you look at only a few years back, that wasn't the case, right? You see Pix in Brazil, you see UPI in India, you see what WeChat and Alipay have done in China, and that wasn't the case. But despite that progress, we haven't necessarily seen the same reality come through in cross-border payments.
Yeah.
But we live in a very, very global world today, and so from my perspective, what's happening and what is going to continue happening is that we're going to see cross-border payments function a lot more. I'm not saying it's going to be the same, but it's going to function a lot more like domestic payments, which means it's going to be instant.
Yeah.
And when I say instant, it doesn't mean hours, it doesn't mean minutes, it means seconds. It's going to be cheap, or significantly cheaper than it often is today. It's going to be convenient. So it doesn't have to be, oh yeah, this is going to take hours, and whatever else we tell ourselves is natural because it's cross-border. And so a lot of the work that we're still doing on is focused on how do we make this world catch up with how global it is already, the payment scene. And today for Wise, I'm not trying to pitch, but this is just to tell you the progress we've made or where we need to get to, is more than 60% of the payments that we do globally happens less than 20 seconds.
Yeah, wow.
Right? And then all of the payments that we support, any part of the world, the average cost that we charge our customers, including any kind of fees, any kind of margin, is 0.62 basis points, right? So, and that when you compare that to the average that you look at globally, that cross-border payments cost, it's like 5 to 7% very commonly, if not higher, depending on particular markets. So I feel like there's still a lot of progress to happen in making cross-border money movement faster, cheaper, convenient, and seamless, just the way we've gotten used to doing things within our markets.
So actually, this is super interesting. I want to stay on this for a little bit, Alvin, before I bring you in, because when we talk cross-border, and I want to just maybe make it real for folks as well, there's both the kind of money movement and then there's the people movement, and in terms of, if I can say, the James C. Scott version of legibility. What do I mean by that? We're all in Beijing. It's been 5 years since I was last in Beijing. I arrived, of course, I loaded up my Alipay. I'm now able to associate an international card. It's kind of worked, it's kind of not worked, but I go to the Beijing subway, I can now use an international card. So like there is the and this is why I often talk about payments, is it's infrastructure. It facilitates travel. It facilitates both business travel, tourism, et cetera, et cetera. So it feels like some of those frictions are being reduced. I mean, you mentioned UPI. It's a phenomenal example. Minor pitch. We process about 180 million transactions a day in India on behalf of Amazon and Google and some of the big clients. So like we're very familiar with that growth story. But as you say, it's been an influence in Brazil and other markets. But this is kind of where we're at today. And we will continue to see improvements in the reduction of those frictions, be it instant payment, domestic platforms, interoperability, as I mentioned about access when you're traveling and so on. What about, Alvin, like 20 years from now, or maybe not even 20, like what in what I've just described, these are kind of improvements on infrastructure or systems that exist. What about systems that perhaps people aren't using today? I'm kind of thinking CBDCs. I'm kind of thinking other...
Stablecoin.
Yeah, sure.
My take is that like in 10 years, at least 10 years, 10, 20 years from now, you will see a combination. I don't see a world where it's entirely just fiat, right?
Yeah.
I can't say for certain that it's just CBDC or even just stablecoin. But I do see a world where there's going to be very hybrid. I always believe that the concept of whatever that works.
Yeah.
Now we need to facilitate that whatever that works, and we live in a big world that many countries are moving at different pace, right? Some countries like China, in terms of payment, mobile payment, you just said that, right, is moving a lot faster. I mean, I remember, we had this mobile payment more than 10 years ago.
Yeah.
And it was like not too long ago, everything went paperless, right? And not only that friction had disappeared, like everything that you can do offline, you can already do possibly online China already. And I think India is very similar, and many markets are moving in that direction.
Yeah.
So the future is going to be a future where whatever that works for that country, and also taking into consideration of regulatory. Because a regulator is going to play a very pivotal role in designing a framework on what works and what will they allow it to work, right? And most of the regulators, as I've said earlier, is that now not the banks can only move as fast as when the regulator moves.
Sure.
Right? As much as a bank wants to move without regulation, without clarity, there's entirely no movement, as much as they want to make progress. So again, depending on which market. Some markets are going to be a lot more sensitive. Maybe China, right? Maybe India, where the market is diverse, and that the need to have a regulatory oversight, privacy, and so forth, that you need to put the framework in place. How much of privacy are you going to allow versus how much of oversight?
But let's stay on this for a sec, because I mean, is there a specific problem to be solved? I mean, my example being, I was out for dinner on Sunday night, and sorry, this is always very anecdotal, but there was a bunch of us getting a meal. Of course, by the end, we could pay by WeChat Pay or Alipay, but they also had the eCNY option. And I asked the proprietor, I said, hey, is anybody using this? No. I mean, anecdotal, yes, but like, what problem is the eCNY or CBDCs perhaps more broadly solving? And again, I'm based in Europe these days. I spent the past 12 years in APAC. I mean, I'm fascinated by the Digital Euro initiative, because it's still a little bit unclear to me. Okay, well, what problem are we solving? I mean, I think very explicitly they say we want a European construct around payments, right? We don't this is the European view. We don't necessarily want international firms running the rails. But that's, Alvin, to your point, that's kind of more of a policy and political consideration. It's not really a technical one. Like, are there still are there still problems to be solved? I mean, there are frictions to be reduced.
Yeah.
But is there anything beyond that?
So I'll share my perspective. I think you've hit it on the nail, where there are things being developed that are trying to solve specific problems. But I feel there are as many things that are being worked on, because there's VC capital behind it, because we'll find a problem to solve, right? But there's a new cool way to do this thing, which is not to say we shouldn't do that, but I do think we need to recognize that. And I think to Alvin's point, and to come back to what you asked, and I know I didn't give you a satisfactory answer in terms of the 20 years. So today, what we are spending time on, and to reduce that friction, is to connect payment infrastructures around the world,
Got
right?
it.
What Wise has done is we've gotten more than 65 licenses. We've connected directly to payment systems in 5-6 markets already, and we have many more in the pipeline. And what that is doing is essentially saying, okay, there's a lot of different systems in different parts of the world. Let us connect to all of that
Got it.
so that we can facilitate all of these payments globally, and that's how we reduce the friction. What I see happening is that there will be a lot of what's being worked on today. In 5-10 years' time, some of that is going to become mainstream. Some of that will be solving particular problems that maybe fiat currency or whatever we're doing may not be doing. But I think what will happen, and I think Alvin hinted on that, and I want to take that one step further, is that today I feel we're a lot more attuned to the fact that whatever we build, the infrastructure that we're building should be interoperable.
Okay, got it. Yeah.
And I feel like that's the future I see as well. I'm not going to try and predict it's going to be this or that or whatever.
Got it.
But I think whatever it might be, I don't yet, in this short time horizon, feel like it's going to be, one thing, a fiat or whatever is gone, and then we move on. I think it's going to be, okay, we use this for certain use cases and certain purposes, and it's solving something. We still need fiat. We still need some other things that we haven't thought of. But how do these speak to each other?
Yeah.
And how are they interoperable? That's going to be really critical.
Okay, so Alvin, let me ask. That's a great point, SK. And I think, look, we feel the same in terms of, as you say, there's different, there's different rates of change or evolution in different markets. We've spoken about Brazil, China, India, but then, to your point, there's either going to be bilateral relations or multilateral or perhaps a global switch. In fact, if anyone's around at 2:15, I'll be talking about a global switch on Discover Stage. But I like that thesis, that theme around interoperability. But now let me ask Alvin about a specific use case. Well, why are we hearing so much about stable coins? Like, is stable coins the means by which this interoperability is provided for? Like, why is this?
That could be one. I mean, if you look at stable coins, what stable coin is trying to promote is, it's semi-decentralized. Right, semi. The reason is I think it's controlled by an organization, but in many ways it's also decentralized, right? And the idea is to allow people to do peer-to-peer. Now, SK was talking about the point interoperate, right? Mm-hmm. But in a peer-to-peer, there's nothing to interoperate. I can send you $100 or even $1 million, and the cost of that transaction is, depending on which network and on which blockchain, it's actually very low.
Sure.
So that's the kind of challenge, and that is a kind of technology advantage that a blockchain has, transparency and so forth. And the interoperability is not even in existence. But again, having said that, that could be part of a. Now again, a lot of these new stable coins are going to be regulated, right? And the regulation is going to put them into an ecosystem where it's again closed ecosystem, and that's where you need to interoperate. But the existing stable coin as it is semi-decentralized, that you can actually talk to each other directly, and nobody controls them. And that's why the question was when I was talking about regulation, that how do you put in a regulation framework at the same time, protect the privacy of the user, and at the same time control what's going on underneath the blockchain.
And let's.
There's a couple things. Sorry,
please, yeah.
I want to react to that. So one is, I think the interoperability piece, even today, I know we don't think about it, but you can be using CBDCs to move money, but at the end of the day, you're spending it somewhere.
Yeah.
You might still need your card, your cash even, right? I've had to withdraw cash. You can use your Wise card, go to an ATM, withdraw the currency you are. I did that yesterday. I typically don't even in most countries, but I realized that there were specific things I needed it for. But that's my thing. I could have used whatever technology to get my money in my account, but I still needed, that's the interoperability, right? That I think I'm talking about. And we might not think about it, but it's already present. And we need to make sure whatever we're building continues to do that. The second thing I feel is, I think the interesting thing, and for me, from not a specialist in CBDC, stablecoins, and that world. Of course, I watch it really closely. I need to, but not being a specialist, one of the things I feel that will need to be solved, and that might predict what comes out on top in 5 to 10 years' time, is the one that finds balance between the convenience and the utility it's providing, but also things like privacy.
Yeah.
Also things like, because I do find it very interesting where. And I haven't been able to wrap my head around it. I hope I learn a little bit more in the next couple of days. But it's like, it's decentralized,
Yeah.
but it's a central bank
Yeah.
digital currency. So one is that. How do you, like, is it really, like, is there really no party that has the information? So that's one. Two is, I feel like one of the things that we're still really working hard on, and a third of WISE is more than 6,000 employees work on, is financial crime. And it's a huge topic for any financial services provider anywhere in the world. That's a very big part of what you do.
Yeah.
And where my question is, whoever can solve for that while still being able to provide all of the promised benefits and utility will come out. Because today it feels like there's a little bit of a, you've got to choose what you want. Oh, it's decentralized and everything and no one can see what. But how do you then prevent financial crime and not being used for...
Yeah, no, I mean, you're spot on. I mean, I would say we're still very much in the future of money phase here. I mean, because really what we're talking about is kind of where we are now and kind of incremental change. And I also would say I'm always a little bit wary of these conferences wherein I think many of us have traveled from different places and we tend to see the world through the lens of people who travel between places and like, can I use my card here? I mean, obviously that's typically not the consideration of most people, right? I mean, most people are largely domestic focused. They want problems solved domestically. I think, as you say, I want to touch on a little bit more of the future of value piece, which is, I think Alvin's spot on. Like, what about the cultural considerations of different methodologies? What about the social considerations, i.e., the reason I mentioned about us traveling around is like we tend to be kind of globalist in our views. It's all about reducing frictions between travel and cross-border. But what about individual markets, cultural norms, social norms, etc.? Let's talk a little bit about value, right? I mean, the reason I mentioned the EV registration, just because it was striking to me this morning, but also there's a lot built into that decision. The government has made a decision to say, we value, you know, green energy, the growth of the Chinese automobile industry, you know, infrastructure, and therefore we're going to ascribe a financial value or incentive to, you know, I guess my question is, how do we see the world evolving? I know this is a little bit broad, right? But how do we see the world evolving from a future of value perspective as it pertains to things like environmental, social, governance? Are we going to see interoperability in those types of areas? Right? I mean, this is a pretty broad, but like, right? How do we construct that?
I mean, we are still very early stage. I was just talking to Tony this morning over breakfast, and we were just talking about the concept of value. And
well, wait, who paid for breakfast? You or Tony? That's where the value is.
Yeah,
I guess. No, I'm joking.
it was all paid for.
Well, there's the value right there.
And the thing is that, I mean, well, in my previous career, I used to work for several MNCs where I was running China business. And the thing is that, as much as the organization wants to embark on that social impact, you know, the truth is that most of them are done very piecemeal.
Yes.
And most of them put the purpose is really PR driven, and it's like, you know, tick on the checkbox that you've done it. And it's still, until today, in most regions, it's still very much unchanged. So, as much as we want to take a value, as I was saying earlier, I was telling Tony, right? When I look at company, even within my LPs and also my partners, right? Again, depending on each investment, they put a very small value on company that cares about social impact, because it's all about making, and they're not wrong, right?
Well, let me pause for a second. Audience, please put your hand up if you make buying decisions generally based on the kind of ESG, how would I say, the ESG
CSR.
commitments, yeah, CSR of the businesses. Like, do people? Okay, great. We've got a couple of folks.
Right. I'm one of them. Yeah.
A pretty small number, right? And you know, I would say that I'm kind of aware of it, but I'm not, like, do I change my behavior? I'm not sure. What about financial services? Does anybody have a view as regards specific financial services firms which have gone above and beyond as regards environmental or social governance? Any hands in the audience of people who said, I've changed bank, payment service provider, what it might be? Oh, wow, okay.
One.
I'd love to get a
Two.
microphone to that guy, but...
3.
Okay, so that's interesting because
I think it's about how you're posing it. The real win is when people choose you for that, but it's not when you're talking about it as CSR or PR, but it is really in the mission and the vision of the company itself. And
Yeah.
I'm happy to explain that a little bit, which is it's when a company is built upon doing things the right way, and this looks very different depending on the industry you're talking about.
Sure.
A Patagonia, for example, the
Yeah.
number of people I've come across who still want to have that vest or want to wear a Patagonia jacket and wear that with pride is because of how they want to associate with that. They're like, they do it the right way. That's who I am, and that's who I want to be with. There are enough other companies that might make a slightly different one, a similar one, a nicer one, or whatever, and a shinier whatever product that you're buying. But I think there's a lot of people who choose. So yes, is that number the majority today? No. But is that definitely growing and like trending upwards? I think I can say that confidently. Even financial services, a biased example, but a real one, is that Wise has very publicly said, we will keep up reducing our prices. We've done that twice within this financial year itself, right? And it's surprising to a lot of people because there's no competitive pressure. Our pricing, the 62 basis points that I said, which came down from 65 basis points, is significantly lower than most of our competition world over. Especially because we often compete with banks that are charging 5%, 7%. And we're asked this question, I'm asked this question a lot. Why would you do that? There's no competitive pressure. But that's what we've said. We're making money, just to be clear. We're a profitable company. We run a sustainable business. We're listed. So it's not as if we're doing this as charity or anything like that.
Sure.
But we've come up with, hey, nobody should be overcharged, mischarged just because you don't know.
Okay, so got it. In this case, there's the financial benefit, but also you're saying there's actually a kind of a value around transparency and so on. And again, actually, it was funny. I won't dwell on that conversation yesterday. SK and I were passing through the corridor. We met someone who was like, "Oh, I used to use Wise, but now I use a particular bank." Because they don't charge fees. And SK, always the salesperson of which I enjoyed, always be closing, was like, well, actually, their FX rates are but I don't know, this still seems pretty today, right? I mean, we're kind of, I guess, what's, and maybe it's too broad a question, but when we think about value, it does strike me that younger people today, and I'm now of an age where I refer to younger people, but definitely there is a different mindset around, are we all kind of just fiddling while Rome burns here? And I guess I'm speaking specifically on environmental here, but I think it's true in other aspects. I mean, can we increment our way to a better future for all, or will there need to be a bit of a mindset?
I think the reality is this, yeah. This is from an early discussion that I had as well. When you look at investors, the traditional old money don't really care so much about social impact, right? Even if they do it, it's just it's to check that box, right? But the younger generation that you just mentioned, we call it the second generation of investor, the younger one, the one in the 30s, in the 40s, who are more
Oh, great.
educated,
40s is still young. Okay, I'm glad to hear that. Yeah, excellent.
The one who's more savvy. I'm talking about investors.
Yeah.
I'm talking about investors. Family offices, investors. They are more savvy. They're more educated. They've seen the world. They are more willing to invest into projects or even into startup or even companies, right? That is in alignment with what they believe in.
Yeah.
Right? But the older generation, you can't change them, right? It's all about, I need to make money now.
Yeah.
Right? I don't care about all that stuff because I don't have a lot of time. But the younger generation, you could even be the third generation. And everything that they invest in would be meaningful and has a social impact.
And
But
I think,
go ahead.
if
Go
I
ahead.
can add to that, I feel that's true for the younger generation that you're talking about may not yet be investors or not the majority of the investors, but they are slowly becoming your core customers, right? Or even if they're not the payer, they are influencing decisions of their families, of their companies, right? And so I feel like that shift is happening. And I do understand that today maybe that's not the majority, but I feel like it is inevitable as you see the focus, as you said, of the younger generation on some of these topics, environment being one of them, or even social, right? Like even how you treat people, how you're thinking about different groups. And I feel like your customers and your employees are going to make sure that by acting and by their decision powers, maybe not their investment dollars, that you do the right thing. But I feel like that investment dollar is going to catch up as family offices go to next generation, and that's happening already, right? There are companies where that's happening, and so I feel the smarter thing to do, not just the better thing to do for the world, but the smarter thing for companies to do is to start thinking about that today, because it's not a switch. It's not a switch to move from, well, I don't care about ESG, no one cares, no one's rewarding me for it, to, oh, it seems like they do, let me switch. That is when you're going to do that very top of surface and PR focus. But if you really want to do it fundamentally and change how you run your business, that takes years.
Okay, so this is an interesting one because
James, I want to echo to what,
please.
what SK was just saying. The inflection point will come, and the way I'm seeing it in advance is that when I look at a lot of startups that came to pitch to me now versus, let's say, even 5-10 years ago, right? You could see a lot of these young startups, especially those in their 20s, at I think 20s to early 30s, in their business plan, right? There is an element of social impact.
Yeah.
Could be ESG, could be whatever that may be, right? There's this element, and more likely than not, than any of these business plans that I've seen for the last 5 years has made an inclusion, right? That social impact is very important to them.
But that's an area I wanted to touch on based on what you've said, which is, I think that makes sense in kind of founder-led companies. And I mean, again, JustPay, we're a founder-led company. We have an ethos. We operate on a certain basis. I mean, I've also worked, in large organizations, banks, etc. I kind of question, like, getting into the organizational, even quasi-political side of things. Do we really think large organizations are going to make the changes from a values perspective when much of the leadership reorgs every 3 years, and where there's not, like, on the founder-led side, I can understand it. That can be more value-based. I guess my question is, and this will be different depending on the market, on the country, how much do we think, and I keep saying ESG, I suppose I'm very focused on environmental in particular, how much do we think environmental change from a bottom-up perspective will come via large corporates or perhaps founder-led companies, and I think they're quite distinct, and how much do we think, back to my kind of example of green registration place, will come top-down?
So I think,
like, who gets to determine value, I suppose, is the real question. Because if we're to leave it to a large MNC or bank, and I mean no disrespect to ever, they're maximizing shareholder value. That is the job. I mean, they would be deficient in their fiduciary duty were they not to maximize shareholder value. But let's be clear what that means. That's not necessarily aligned to the values of younger people today, or indeed to many of us today. So are we going to wait for large organizations to affect change?
I feel the way I've seen it happen, and I don't know if that's going to change because it's human nature, is that you're right, larger organizations might find it harder to do it, and they may not have a focus and whatnot.
Yeah.
But so it is started and initiated by founder-led companies or young startups or whatever that might be. But at some point, people take notice. This is true not just for environmental topics. This is true for any topic. This is true for innovation. This is true for using a new technology. You don't because you don't need to. And at some point, you realize you have to, so you do. And why I think that's important is because, yes, larger organizations can have much bigger impacts than smaller ones. But I think there are going to be smaller ones that are going to catch up in some way or the other. And so someone's going to take notice and then we're going to do it. It's do or die.
Got it.
And so I do feel that will happen. From a government and regulations and whatnot, I think yes, but that takes too long. Like that to me comes even after the markets end up moving things first.
And that'll be specific to the political environment. I mean, a lot of these markets are operating very differently in terms of top-down. Got it, okay.
So in fact, it'll happen because the customers ask. So I do feel it comes down to that. It's because the customers demand it or they reward it. Like even if it's, let's say, a company with certain environmental, like today there may not be a focus, but at some point it's going to become mainstream about maybe certain cryptocurrencies and whatnot. It's like, hey, there's a big environmental cost that we're not talking about.
Well, let's get into that because, I mean, I would be remiss were we not to mention AI. And I'd love to get your thoughts in terms of the impact of AI. I know this can become a little buzzword bingo, but I mean, I do think we're seeing the application. I mean, certainly we've got quite a number of machine learning teams working on cost observability, et cetera, et cetera. Some of the banks are doing X, Y, Z. But with AI comes the potential for great productivity gains, et cetera, et cetera. But also there's an environmental consideration here, clearly. I mean, the data centers, the compute, the power usage, et cetera. I mean, how might AI influence every aspect of the future of finance and the future of value over the next 10, 20 years? I mean, I want you to answer one wordy and then the detail one. Like, is it going to be a net benefit in terms of the future of value in the next 20 years? And then if so, why?
I think yes, and that's just being hopeful, right? That's.
But will the benefit then? Look, this is a tricky one, right? Because this is a bit crystal ball. But will the benefit be one of financial benefit or the broader value piece that I'm mentioning? Is it a productivity gain only? Or, I mean, I think you'll still find people today saying, well, AI is going to solve the environmental crisis because basically, we're going to apply the not. But that feels a little hand-wavy to me, right? I'm not.
I feel like, and this is nothing new to the audience as well, but I feel like, to me, the reason why I say I'm hopeful and I think it's going to be net positive is no different from when the internet came about, right? And it was, we don't know what it is. Oh, is it really to go buy things? And that's what happened in the original dot-com bubble or before that, right? That's what it was being used. We hadn't imagined the things that we could do and how it's transformed how we live our lives, how there are things that couldn't be imagined as being done. And so I feel similarly about it. Like, I know the downsides. I know the strangeness of things if you're not used to it. But and I know right now it feels gimmicky, but I have hope that we can find the right usage, and then over time it's going to be net benefit, right? We can't prevent downsides of anything in the world. So that's generally how I feel. But I do think we need to move past sort of the gimmicky, shiny nature of things to truly what are we trying to solve with it, where are we using it, where are we applying it, and I'm hopeful and I'm excited to see what's to come on that front.
Well, bringing Alvin, but because we already have different regimes emerging from an AI perspective, right? The EU has introduced the kind of AI Safety Act, I believe it's called. California has this thing. The Chinese have a very different approach. I mean, are we going to see pockets of innovation development in this space? Does it make sense to think about these things in a global way at all, or is it never going to be that?
I mean, depending who you're talking to, right? Because the AI is actually double-edged sword, right? On the one hand, you got people like Elon Musk who thinks, you need to control it. If you can't control it, that's you're putting everybody in danger. Then again, you've got some people who are on the other side, right? Who thinks that allowing AI to proliferate. My stand, I think there need to be some form of framework. I don't think we are in an era where we can just allow it to explode on its own. While at the same time, I'm not saying that you need to put so much stop, right, that you totally ignore innovation, and that you will stunt innovation. So the world ahead, again, depending on which country, everyone is implementing their AI, framework, differently. Again, depending on market requirement and what have you. So again, it all depends on who is leading that market and who is leading that policy. I don't see that one size that fits all. Now, even on generative AI, we still have issue with very basic thing, copyright.
Well, yeah.
Everything on generative AI is infringement of copyright.
By the way, great point around back to value. What is value? What is artistic value?
Yeah.
I mean,
how do you define what is valuable in terms of generative AI that does not infringe copyright?
Because as of now, I mean, many of these instances whereby you say, right, generate a picture of XYZ or video of ABC, I mean, actually, effectively what they're doing is aggregating a lot of people's, proprietary or pre-existing IP, aggregating it, synthesizing it, spitting it out. I mean, talk about value creation on one side, but massive value destruction on the other. I mean, who gets to square that circle? What does that look like?
I think the reality is the ship has sailed, is how I feel about it. So I shared the opinions, I feel similarly alarmed, but I also think I don't see how we're going to
put the
close
genie back in the bottle.
close the Pandora's box. So I feel like we'd rather now accept where we are and figure what we need to. But also, I don't see how it could be any other way. Unfortunately, it's because, like, as I think, and maybe to reuse the analogy, it's like, did we know enough in the late 90s to regulate the internet and to come up with all of the rules we need to make sure that no potential downsides happen? We didn't. We had to let things happen. And there were a lot of, today we might be comfortable with where we are, but there's a lot of bad things that have happened. There's a lot of things that were accessible by people that shouldn't.
Yeah.
Right? And so, but we had to go through that to figure out what's good, what's bad, what's okay, what's not. And then we came to something, we created regulations and whatnot. And even till today, there might be different levels of how these things are regulated. So I foresee the same happening. I think it will be, I don't think it's going to be any one person or one government or one body that will or can decide what's right or what's not. And it's going to be the collective, I don't know if it's wisdom necessarily, but the collective choices of people world over. And I say that specifically, choices, because if we find that people are more than comfortable, despite knowing what we do today about copyrights and things like that, to continue using those tools, to continue saying, hey, make me this image, but make it like Picasso would, as an example.
Yeah.
Right? And we're fine, and we're seeing that's happening and that's growing. It's unlikely we're going to be able to completely stop that from happening. But if we find that people are saying, hey, I'm not comfortable, but more people are not doing it, and there's few who do it, and we clearly can say, oh, that's bad, we shouldn't be doing that. If society overall, globally, and we're seeing more people feel that way, then you're going to find regulations and rules and social norms follow that, right? So it's less likely to me going to be rule-based, because you can circumvent it if people still demand it. It's more likely going to be, now that we know about it, we're going to form our opinions about it. Some are going to be, yeah, I don't care, and some are going to be, no, this is bad.
Well, I mean, look, that portends a very different future. So maybe to kind of close, let's take a view for folks in the room. You'll have a lot of transaction bankers, a lot of people coming from kind of traditional or non-traditional financial services. And even today we would ascribe finance and value kind of somewhat interchangeably. If AI promises what we think it does, I mean, will people be doing the same job that they're doing today in 10 years? Will those jobs exist in 10 years? And therefore, I mean, is that a net positive? Is that, I mean, again, pretty big question to close on. But I mean, I guess I've been pretty skeptical of the last few cycles of kind of innovation. This feels different, right? This does feel like, we're on the verge of a big change. And again, back to, per market, we'll regulate these things in different ways, et cetera. But if the genie is truly out of the bottle, are we going to be sitting here in 10, 20 years? Will any of us be sitting here in 10, 20 years?
Well, to answer that question, this is my take here. Now, short to mid-term, that's going to be a huge impact, because it's going to disrupt. Like I was just saying earlier on generative AI. Generative AI completely destroy value, period.
Yeah.
Right? So anything that you could possibly do before with generative AI, it destroys it. So if you're on that path of being destroyed, you'll be destroyed. So if you're a copywriter, if you're a visualizer, all that will be destroyed. So within a short period of time, short to mid-term, I think that's going to be a shocking impact. Yeah.
Isn't financial services ripe for this as well? I mean, is there any reason that
it impacts across? I mean,
Yeah.
when I say this, I'm really generalizing. It's going to impact across. Like maybe at different speed, but short to mid-term, huge impact. But long-term wise, I'm always bullish and positive that we will human will recalibrate, right? And they will start all over again, retraining, and so that if AI comes in, that takes away all this mundane work for you, so that you can do and we can do more meaningful work. That's the whole purpose, right? I mean, the whole purpose of robotic automation and so forth and AI is to take away jobs that we don't want to do, so that we can embark on that trail to do something that's more meaningful. So long-term wise, I think we're still going to be net positive. Short to mid-term, very painful.
So I think last couple thoughts.
Yeah.
Financial services, I think because of the regulated nature of it, and it's the reason why it's regulated, it's because it's people's money, and because of the amount of fraud, scam, financial crime, money laundering and whatnot.
Yeah.
I think just how the technology helps, you can't see it just like that. You've got to constantly factor in, can it prevent all of those things, right?
Yeah.
And until they happen, regulations are not going to allow you to leverage some of that. So I think it's really important to keep that in mind. There's a reason why there are organizations that have been operating with the tech stack that they've had for decades, and they can still do that because of some of those reasons, right? They move slowly because of sort of what's at stake. So I feel, sure, it's always right for it. We've tried to innovate as much as we can. We will continue doing that. I'd like to believe we're at the cutting edge, but it looks a lot slower from the outside.
Got it.
It's because we've got to factor in those regulations, the downsides, and protect for that. And the second thing you asked, are we going to be here in 10 years? I think definitely, and I'll tell you 2 reasons why. One is, I think with AI and all of these things, the importance of the real person increases so much more.
Maybe it increases.
So I feel it increases because of you want to hear somebody and you want to talk to them in person, because everybody can generate great ideas and thoughts and whatnot. Are they doing that in front of you? Are these genuine thoughts, or is it somebody creating that, an AI creating that? The second one,
in-person interactions become absolutely...
Yeah,
completely.
And the second one is something I learned 45 minutes backstage, is that apparently in 2011, at the Innotribe stage is where Wise pitched, or Wise's founders pitched the business to get funded or whatever not. I don't know what that was. Of course, I was not associated, but it's very cool to know I get to be here today. I don't know, 12, 13 years later, so hopefully...
Yeah, well, on that note, I do think it's a good note to finish. I mean, look, it's been pretty broad-ranging, and I think please forgive us that, because it does feel like we're on the verge of something new. And I will say, you know, I did my first Innotribe 10 years ago, as I say. The topics we've gone through during that time, be it, you know, blockchain, decentralization, cloud, big data, etc., all of these felt relatively incremental. It does feel to me that the world in which we all operate, be it financial services and wide, I mean, it lends itself to unstructured data being ingested and structured in a way that's actionable, insightful, etc. That this is the kind of future of AI, and it's going to have a transformative impact. And I think we're just at the start of that journey. So I do think in 5, 10 years, we'll still be on the stage, exactly as you say, because in person will be beneficial. But I would be amazed if any of our jobs were a straight line between here and there. I think the impact is going to be profound, and I think hopefully we'll continue that conversation over the coming years. With that, please join me in thanking Alvin and SK, and thank you for your time.
Thank you, sir.
Thank you. Good job.